Good evening and a very warm welcome to all our viewers to the 38th edition of Cedris Knowledge Series. We started the Cedris Knowledge Series amidst the lockdown, wherein we invited one speaker each month, speaking on a variety of topics ranging not just finance and investment, but overall well being and personal health. We'll now play a short video of Cedris Wealth Partners. With the interim budget just being announced, I'm sure we all must be having a lot of curiosity as to its impact on the markets and the overall economy. Today, we have with us Mr. Sonam Udasi to decode the budget. He's the senior fund manager at Tata AMC and will be completing a decade with Tata. A very warm welcome, sir. It's an absolute honor today to have you with us. We'll now play a
My
short
pleasure.
video to further. Thank you, sir. We'll now play a short video to further introduce Mr. Udasi. For all our viewers, this is a moderated session where we will be asking our set of questions to Mr. Udasi. Meanwhile, if you all have any questions, you all can post them in the comment section. We will happy to address it towards the end of our discussion. I'll now like to hand it over to Mr. Nilesh Bajaj for taking the discussion forward.
Thank you, Unnati, and welcome, Mr. Udasi, for the 38th edition of Cedris Knowledge Series. Uh, I think we have been having different speakers each month. We do talk on variety of topics and deep diving on things which are more relevant for this period. In fact, currently, as I speak to investors, people are talking about how things will move forward. They are a little concerned about the valuations of the markets, but definitely they don't want to lose on the the decade of growth which we expect from in India. So that's the reason why I thought that we'll have a topic which is going to be less to do with the budget because it was an interim budget and more to do with how the economy looks going forward and what can investors expect going forward and what are the areas where they, as advisors or investors we need to focus on for getting good returns. in fact. Uh, Welcome all our viewers from India as well as globally, especially from Middle East, whom we have been interacting with regularly now. Uh, and I'll take up about 7 to 8 questions, which will ask questions about the budget as well as the economy. In fact, so Mr. Sonam, yeah, my first question actually to you is citing that this was more of an interim budget and just before the general elections. Uh, what would you analyze of this budget, and what sectors do you feel would benefit from the same?
So, Nilesh, first of all, thanks for inviting me. Uh, See, at least for us at Tata AMC, I mean, we were very clear. The See, this government has never showed an indulgence of, overspending on anything. In fact, we call it the Bania government. From on a lighter note, which is not necessarily a bad thing. I think the intent of fiscal very well illustrated just before Madam started speaking, and I'm very glad that she has stayed that path. See, as investors, all said and done, valuations and sentiment of investors keep changing. But if your pitch is perfect and fiscal prudence when you do it on the economy, if the pitch is decent and even accidents that come, because ultimately you're trying equity and other asset class, it's running some kind of risk. If the pitch is good and your environment is managed, then you can bat for longer and you can bat constructively. So I think that's what it has done, and that's a signal. I mean, that's why your bond markets reacted the way they did. uh, because even despite the worry that US may not cut rates anytime soon. uh, you know
Right.
Sorry,
Yes.
you were asking about what sectors and what themes do you think will do well. Did I miss that? Okay. See, this government has been very, very clear that India has so far been a consumption led economy. From day one, they have talked about making India to do more manufacturing. That theme will continue.
Mhm.
Even though the allocation or incremental growth in that allocation of infrastructure or capex was lower than say last 2 3 years on an average, the trend is good, and I think they want to incentivize the Make in India campaign. They are very, very clear that they will not be successful in everything. When we meet them, absolutely clear, but they are saying that what, you tell us what you want, we will provide what we can, and then let the thing take it forward. And there'll be some segments where we'll be very successful, there'll be some segments where it will not make much headway, but we'll try everything. So currently what I think on the Make in India, what segments India and Indians will do well is, especially on the PLI side, are the guys on electronics. Because
Mhm.
wherever you have a large market which is domestic consumer, then the risk reward becomes extremely favorable for longer. A defense, because it's the government's prerogative, that segment will still continue to do well despite whatever we call on valuations, because they are the largest buyers and there is a B2B export possible within governments. Railways is one segment where lot of the valuation sort of catch up has happened. There are a few public-private partnerships that will continue to do well. So that segment should look good. Uh, I think the one piece on the PSUs which has not done relatively well are the oil PSUs, and I think, in my opinion, that trade or that valuation catch up will still be on for the next 6 8 months.
Mhm.
And the
Wonderful.
segments that do not look, yeah, that do not look so great are still mass consumption, and commodities look more China dependent than earlier.
Hmm. So I think, you know, domestic consumption, infrastructure, the PLI, the government initiatives on PLI and Make in India. I think these are a few things which industries dependent on them will are expected to do well. In fact,
Yep,
and the
yep.
old laggards are going to be laggards in the future. What I could just hear
For
that.
now, for now, yeah.
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 Okay. Wonderful. In fact, you just told that this is a Bania government, and that could be seen from this this pre-election budget also, interim budget, where generally budgets are populist budgets. You know, before the election, there will be freebies, and they will try to dole out something so that they get some brownie points. But we have not seen that this time. In fact. So one thing is, okay, it's a Banya government, and definitely, it's it's not been a very popular budget. But do you also feel that there is an expectation that you will see a stable government again back into power, and that's one of the reasons why they've not gone for any populist measures?
So I think that may be partly true, but even on the last vote of account, which I think happened somewhere in 2019, I don't
Hmm.
think they, even during that time, they were not that populist. They were very crystal clear that, I think the Prime Minister Modi's cabinet is pretty clear that they want mass people to come out of poverty, not led by dole outs, but let's create the infrastructure, and that infrastructure will allow them to have their own ecosystem of jobs and work rather than we supporting them for a long time. When you do
Hmm.
this, the returns are back ended, and it takes a lot of patience. To their credit, they have not, taken a back seat on that whenever things have not been doing so well. Even today, when there a lot of criticism that job creation at the lower end is not what you think it is. But to their credit, they have stuck to this line, and they are very crystal clear that this is the way forward for India. Uh,
Right.
if that is the focus, and they have taken, because no private sector is not spending money in terms of investment or capex, so they have taken
Hmm.
this view, and I think it's a pragmatic approach. Their finances are allowing them to do this. So
Hmm.
it's a good. I think more importantly, foreign investors who have felt left out, they will look at this very positively. What they
Hmm.
have done.
Hmm. No, and definitely we have seen that in the markets also. The markets also reacted very positively yesterday. But
Yes.
that's a very short-term kind of this thing. But it's very heartening to know that the government is not here for populist measures, but more for fiscal prudence, and for seeing that the long-term economy is more sustainable. Actually, uh, we have seen a wonderful rally in the equity markets. It's been a dream run, in fact, and it's been there since a while now. We have seen markets almost giving you more than 100% return since the COVID lows. Last 3 months, we have seen a rally on back of anticipation of a stable government. Okay, because with those three states, where BJP got a clear majority,
Right.
and then there was again an expected rate cut from Fed, as well as maybe RBI may follow suit. But do you feel that these last 3 months where we have seen this rally in the equity markets, this all is now discounted, and we will get back to the market will be driven more by corporate earnings than only these expected events?
So I think the market has already started to look at earnings very closely. And if you see the result season so far, and there are
Hmm.
numerous examples, if results have not been good, whoever you are, you have been rogered ruthlessly. So one
Hmm.
thing that when valuations are fair or slightly premium, then investors are unforgiving, and if you deliver, then your premium sustains. Uh, See, one thing I would like to, highlight in this, when we look at multiples, say a P multiple, for example, and Uh, the longer term P multiple of the Nifty is within range. The 10-year average is 20. You are at 20 times 1 year forward. So you are not that expensive comparatively. It's the small and the mid cap, the broader market, which is at a premium to long term average. That being said, uh, normally markets work on three things. One is the earning factor. You have the earning factor. You need to have a tailwind of that. Things will continue to remain uh, buoyant or positively inclined on the economy. Um,
mm,
and then you have a leadership. So even in stock cases, there were banks. So there was a time when Aditya Puri was heading HDFC Bank, and apart
mm,
from the core earning P multiple, there was a
mm,
Aditya Puri factor that premium was attached. So today,
mm,
India has not only the earnings, but there is that X factor of this current government, and one cannot deny that. So anything happens to this X factor, you are carrying that risk.
mm,
If this continues for a longer time, I think your PE premium will
mm,
continue for quite long, because this time around you have a very believable budget. I mean, the good thing about this government is that every time last 5 7 years they have come out with a budget. It is believable. It's no longer they are hiding something. Any economist you talk to, yeah, this to they will achieve. For her
mm,
to say fiscal deficit this, I have beaten it by point 0.1. So next year she
mm,
has said, say, whatever number everybody is discounted, she will beat it. So she's become
mm,
almost like Infosys, that underguide and
mm,
over deliver, which is a
mm,
very good thing to see in a government. Many few governments in the world are able to do this. So that
mm,
premium for investors, both local and global, will continue. You will have volatility, but I don't think the premium is going away. You might have sector shifts depending on bottom up. This
mm,
is here to say, and this is what is heartening for risk-taking investors like us, because
mm,
ultimately it's risk. How much risk are you willing to take, for that long term?
mm. So, do you feel the next 5 years will be the markets will do better than the previous 5 years, or will not do as good as what markets have done in the previous 5 years? What is your expectation?
So I'll answer it in a way that I look at things. See, as investors now, there are times when
Mm,
you are also in doubt, and then you
mm,
say, okay, and in the night you look at things and you. So there is one thing that I've always turned to, and which is I think with what Mr. Modi also turns to in his own way. So I look at just the per capita GDP trend for India, and
mm,
we were $1,040 per capita income economy in 2008. It took you
mm,
11 years to bridge, double it to $2,000, and then there was
mm,
COVID, and now you are at $2,400 odd.
mm,
The basic rule of compounding is that the next doubler comes in half the time. It's a
mm,
very simple rule method, some simple mathematics. Even IMF is saying that by 2029, probably India will be a $4,000 economy. That
mm,
number itself is hardly anything. That's like 3,20,000 per head in
mm,
today's context. Not a great annual number. But at
mm,
the margin, you have 28 states, 29 states, take out Delhi, 28 states. That means 28 state capitals, 28 second state capitals. So basically 56 cities odd. I think in the next 5 6 years, they will
mm,
all be a $6,000 kind of per capita income. I mean,
mm,
Mumbai region, some parts of Pune region, Delhi, they're already $8,000 per capita income on an average, which is equal to Bulgaria, the poorest
mm,
country in Europe. Just to give a context. So,
mm,
if this trend continues, this power of compounding continues,
mm,
then I would pitch it like this: that the India story is you're getting in even today at $2,400.
mm,
I'm betting in the next 3 years, some Gora or some brown economist will come and
mm,
write a report. You know what? India is reaching 4,000. Eight thousand
mm,
dollars happens in the next 4 years. Essentially, in the next 10 years, India can become a $8,000 per capita income. So you are getting an entry at $2,400. There is an
mm,
$8,000 per capita income possible. You
mm,
take a choice. What do you want to do? I think
mm,
that's the so when you say the return, when the hockey stick sometimes come in certain
mm,
segments, you will
mm,
not realize. And the
mm,
beauty of actually some of the pressures that corporate India has faced, whether it's demon, whether it's GST, etc., they have made it them very resilient. Any sector
mm,
segment that you look at, any one, you do not have too much debt on your books, so your ability to take that impact is quite high. And all segments have world class companies and world class digitization efforts, best of both worlds, brick and mortar and digital. And
mm,
very few places where this innovation or this R&D is going on. This can surprise. It gives you great money making ideas even today. I mean,
right.
I sometimes believe that if I was 10 years younger, I would have, done even better segmentation of the market.
Hmm. That's so true, actually, and definitely there are opportunities even today, available in the markets, which are not very expensive, in fact,
Yeah,
and
yeah, yeah.
the growth expectation is also expect the corporate earnings are expected to be pretty good, in fact. Now coming to the risk factor, I don't know, I was trying to do a little bit of my this thing. I could not see any domestic risk. In fact, the all the risk which I could see, this is what and that's why I want you to answer this actually. Is that one, is there any domestic risk? Okay. And two, because there are a lot of these geopolitical developments happening today. I just saw it in the newspapers that India, that US is planning to bomb a few places in Iran. They're making the preparations for that. Could these global events derail the current rally in the equity markets? And how do you expect the markets to behave in fiscal 24-25? And two, are there any domestic risk which we carry?
Okay. So see, when you have had a catch up in valuations, uh, you will continue to be volatile. You know, and every year in the last 10 years that I've seen this market, it has been extremely volatile on either side during a particular calendar year or fiscal. And investors should be ready for it. Point number
Mm,
one. Uh, Secondly, I think the only domestic risk, there are two risks in my mind, top of the mind. One is the fact that there is a key man risk, and though we
mm,
don't say it out aloud, it
mm,
matters because, as I said, there is a premium attached to Mr. Modi, and
right.
that factor, whatever you call it, that's the
Mm,
biggest risk that you have, because he has a certain way of doing things, and businessmen and global diplomats have aligned to that, that this is the way India is going to function, and they have laid their business plans accordingly. So if
mm,
that changes, then a lot of their equations change or
mm,
calculations change. So that's one domestic risk. The other biggest risk, US can continue to bomb wherever it wants, and so I think the biggest risk that India has is that if you get into a direct war or confrontation, or dragged into a direct war or confrontation with anyone, and I
mm,
think that is the biggest risk. And here we are just talking China. There's nothing else that will shook investors so much. um,
mm,
to their credit, just to put a disclaimer to this, that what is the government aware of this risk, and what are they doing to, I'll just draw, Mr. Jaishankar, he goes wherever in Europe, he goes and abuses Europeans, right?
mm,
And he says, he calls a spade in the US.
mm,
But with China, he has always had a measured response. He says that we do not have a normal relationship. It's not normal, but trade is separate. So what
mm,
I think the current establishment sort of, I can only hazard a guess from outside, is that what, we are a $2,400 economy. They are $12,000 per capita income economy.
mm,
Let us avoid direct confrontation for as long as possible, because China is slowing down, and there is worry that they will look at somewhere else to fan their domestic emotion. So we are
mm,
hoping secretly that that uh, you know frustration falls on Taiwan and not India. That's why
Mm-hmm.
the Padam Shri to Taiwan semiconductor, champion. So
Mm-hmm.
I think they are trying as much as possible to avoid that risk. But
Mm-hmm.
these are the only two risks that I see. Um, and that is why even today, if you hear the PM's comment, he is
Mm-hmm.
now pushing the domestic auto industry. Okay, why can't you have more cars? Why can't I see make in India cars in Europe and US? Which
Mm-hmm.
is throwing the challenge to the corporate India. Okay, why are you looking at only domestic?
Mm-hmm.
Try and so, which is very very heartening from India's point of view.
Mm-hmm.
So these are the only two risks that I see. I mean, these carry everything.
Mm-hmm. So Keyman and China.
Key man and confrontation with China.
That's what.
If
Yeah.
you have a spat somewhere and in somewhere in South China Sea and something, one day,
Mm-hmm.
2 day, that really doesn't, because both are the good thing about both India and China are both are very very business minded in their approach now, very very business minded and economic minded.
Mm-hmm. Absolutely. No, wonderful. I think this was a very differentiated kind of a thought, in fact, which generally does not come to your mind. We are just talking about what's happening in the Red Sea and,
Yeah,
what's happening in the Middle East, in fact.
yeah, yeah.
Now coming to shifting focus to the bond markets, in fact, and, this is something which post the budget announcement, we saw a good rally that day in the bond markets. And we were expecting that there will be RBI cuts this year. Fed is going to going to go ahead with rate cuts, and you will see a good rally in the bond market this year. But with the with the lower borrowing announcement, I think that's something which actually we saw that was the reason why actually the bond markets rallied. Would this continue, and what do you feel? What is your take on the bond markets? In fact.
So see, in my opinion, the current fiscal discipline showed by the budget allows the RBI room to maneuver, because RBI can only do so much. That being said, in all honesty, we do not need a rate cut. You know,
Mm,
there is growth happening. RBI is actually telling a lot of the NBFCs and banks that don't borrow so much or don't increase unsecured lending so much. So they are trying to avoid risk within the system. What happened to
mm,
Paytm as well? Same thing. Uh, but the larger question is, and because US is averse to cutting rates right now, it gives them room not to cut. However,
mhm,
if the US was to cut for whatever, even in my opinion, I don't think even the US economy needs to cut, because their job data was pretty good. Economy is not so bad. You only
mm,
cut rates when there is a problem or when you want to
mhm,
pump prime the economy. You don't need
mhm,
to. So I
mhm,
think secretly Shashikant Das is hoping that, Shaktikanta Das ji is hoping that I need not cut. So I
mm,
think the rally in the bond market will still happen, but it will be more from the prudence snapshot and the bond buying that is likely to happen somewhere in April. That will
mhm,
give you some amount of leeway.
mm,
Direct cut, I think, might happen somewhere closer to September, October. When the US starts to give a 25 bip indicator, and the RBI may turn to an accommodative stance and then go forward. So longer term, I think our debt team feels that we will be hitting 6.75 somewhere in
mhm.
1.25 years.
Okay, wonderful. Actually, uh, you know, uh, now coming to your funds, how are Tata funds positioned to the current markets? How have you positioned your funds?
So see, as you know, that I run a value fund, a value strategy called the Tata Equity P Fund. That was pretty straightforward, and we have benefited immensely last 2 3 years, especially last 1.5 years, because
Mm,
only value has really run up. And by
true.
by that definition, a large part of this is PSUs. So we
Mm,
really benefited from that. the change in strategy, because when we run this value fund, we look at growth. We don't look at only value, and that has helped us tremendously. So we went into autos quite early. We were able to get into some of the utility and PSUs quite early. Defense was a theme that qualified us quite early. Currently, we are looking at some of the large financials with a value lens now. They have started to qualify in the value zone, and maybe not now, but at some point in time, the risk reward will become very attractive. So we are evaluating. We are slowly inching our weight up, but as I said, the trend is just too forward in the re-rating bucket. Wherever the valuations are lower, people want to take them to normalization, and then so that's the trend, and that flow is just strong. I think value is focused on that. uh, Despite, the only flaw in the budget, if I may call that, was when you are doing this fiscal consolidation, it gives you less money to spend to the masses, or to pump prime consumption in the tier 3, tier 4, or rural population. Rural incomes have been, anemic. The only reason why they are up is that there is a direct benefit transfer, and the land prices have shot up across India, and that gives you a sense of wealth effect. Otherwise, real consumption. So on one side, lever is struggling. On the other side, Tanishq or Titan is doing extremely well. So there are two sides of consumption within India. I think this trend will continue for a little longer. So within consumption, what we have done is we are playing food processing. I think food processing, liquor, these are the two segments over the next 10 years can grow fourfold in size. And therefore, you have to keep looking at opportunities holistically in this space, and keep hunting for your next mega multi-bagger. You will get in these spaces, because the size of the industry can potentially become 4x, because of that per capita trend that we talked about. Also, one segment which, and I say this again and again, the segments that you are dealing with as wealth managers or advisors, segments as an AMC or an insurance company or a general, the trend of financialization of savings, if you have doubled your AM in the last 3 years, 5 years, I think in the next 5, 7 years, you will still double from here, point to point. You might even do better, but the M2M plus the trend, it will take you there. The percentages of financial savings is hardly single digit even today. So there is scope for you to. These are segments that structurally we are very positive on. Wherever we are hunting for stories here continuously.
Okay, okay. No, wonderful. Actually, it was really a very enlightening session. Uh,
No, thank you very much. Thank you for taking time out. Thanks.
yeah. So Sonam, I'll just pass it on to Unnati, for taking over the audience Q&A and her final closing comments. Yeah, Unnati.
That was a very interesting session, sir. I'm sure the points mentioned by you, especially regarding the probable risks that our economy might face, has given a very differential perspective and a lot of key takeaways to us and all our viewers. So, thank you very much, sir, for such an enlightening
My
session.
pleasure.
One question which I have for you is that the government in this budget is planning to build 2 crore houses under the Pradhan Mantri Awas Yojana scheme for the rural poor. What will the impact of this be on the real estate sector and the supportive industries?
So I think three segments will do very well, and they are a direct beneficiary on from an industry standpoint. Um, the affordable housing finance companies, they are a direct beneficiary of this, and there are now a dime a dozen, and they are anyway growing at 25% CAGR for the last 3 years. They will continue to get a leg up. I think cement and other construction aligned segments, will continue to get some kind of buoyancy in terms of volume growth, and one can take a view there as well. um, Also, because you're going on a house building spree, anything that is linked to cables and wires, or having to beautify your home, whether it's sanitary ware or tiles, etc., very basic kind of industries, and take a view on valuation, that segment has a longer runway from here on. In terms of pure, if I think this is about it. See, the next segment, we are not really the the urbanization of the tier 3, tier 4 folks will create um aspirations on other factors of consumption. I think the reason why basic consumption is suffering is also because the tier 3, tier 4 are now slowly, they have just let the landline, you know, what we used to call that, they didn't use the landline at all. They went to mobile directly. So I think they are becoming aspirationally without going through the motions of basic consumption. I think that factor will also come through on the discretionary side of consumption, maybe over 2-year time frame.
Right, sir. Wonderful. Thank you so much, sir. This is it from our end. Uh, I would like to thank you for making the time to grace the event, our knowledge series, and to Tata AMC for arranging the entire session. Uh, a big thank you to all our viewers for tuning in, and we'll return next month with a new topic and a new speaker. Thank you.
Thank you, Sonam.
My pleasure. Thank you. Thank you.
Have a good weekend. Yeah.
Thanks. Have a great 2024.
Thank you.